London AIM-listed Reabold Resources invest in existing gas projects and near-term production potential. According to its website, proceeds from monetization events are balanced, it says, between shareholder returns and reinvestment into new and existing projects. The co-chief executive is Sachin Oza. He joins us now on the line. Sachin, welcome. It's been a long time since I caught up with Reabold Resources. We'll talk a little bit about the share price in just a few moments' time, and also this most recent deal with Gunvor, which I know is a large deal for Reabold. Just before we get on to that, let me just give you a platform to talk a little bit about what Reabold is doing at the moment and what your delivery for investment and shareholders is.
Yeah, thanks very much for having me, and thank you for the question. So you've outlined already what the strategic intent for Reabold is, which is identifying low technical risk, high quality gas resources with the objective of being able to be brought on stream in a ready and efficient manner, hopefully then supporting the energy security needs that are so desperately needed across Western Europe. And that's our focus. That's what we're trying to drive towards. And we have two key assets that we are progressing currently in that strategy. One is our UK onshore asset called West Newton, and the other, which is the very substantial Italian project that you talked about, is called Colasanto. And we were very pleased to have announced the deal that we have done. This is a clear indication of trying to execute on the strategy that you had already outlined. And as I said, very pleased to discuss it further.
Yeah, let's take a look at this deal. It was announced yesterday. Heads of agreement with Gunvor for offtake from LN Energy. Why this deal? Why now? What's it going to provide?
Yeah, so in talking about the kind of strategic projects that we look at for oil and gas, and it's probably your listeners are aware, one of the key issues that surround the progression of such projects is associated with funding. And the funding is such a problem for smaller companies, and the ability to be able to source that funding substantially unlocks the resource and value potential of the asset base. In addition, it just lends confirmation to the validity of the strategic value of such a project, particularly when a partner like Gunvor is so interested in taking the offtake and indeed prepay associated with gas that will ultimately come from Colasanto. So I think what we're really trying to get across is one of the key issues that surrounds this industry is funding, and a partner like Gunvor lending its weight behind this kind of project is a key and important step forward to unlocking its value.
I want to pick up on this funding point, actually. You've got in the statement saying it's a prepaid funding of around 30 million euros. Clearly, this is a fairly unusual way of doing it. Is this something that is defining this deal particularly?
Yeah, so there are two elements to it. You'd mentioned the offtake and the prepay. So to talk about the what the heads of agreement envisages, we'll look at it in two parts. First is the offtake, and the offtake is really for the marketing of this LNG. And I think the important element here about the small scale LNG that we produced, the LNG that will be produced from the small scale plant, is really a type of product that has a premium in the Western European market. So that's the first element. We've secured something that has a strategic value through the marketing that someone like Gunvor is able to offer. The second element associated with it, as you quite rightly point out, is a prepay funding. Now, prepay funding is actually something that is used in the industry, relatively frequently as a form of funding. And the prepay is essentially saying that the buyer will offer the funding ahead of actual delivery of the gas. Now, as you said, the terms, I guess, or hinted at, the terms of that kind of funding are in the RNS. So it gives you the quantum of the volumes, which is 999,000 megawatt hours. And we've given an indicative level of what the price is right now, which is 30 euros a megawatt hour of that gas, and essentially multiplying the two numbers gives a sense of what the scale of the funding would be, as it were, if we were able to sign the agreement today. So that's 30 million euros. Now, what the reason that we have to, that this wasn't stated explicitly is that it's going to be dependent on what the prevailing prices are of gas at the time the definitive agreement is signed, assuming obviously that we get to that point. Now, at that stage, we'll obviously be able to give a much clearer element of guidance associated with both the offtake and the funding piece of this. There are obviously other conditions that will need to be met as well, but it lays out the framework through which Gunvor will engage with the Colasanto project. Now, I just would like to stress that that quantum of capital funding really goes a very long way into ensuring that we do have all of the funding required in order to have the development of Colasanto secured, such that we can move to getting first gas in 2026.
Let me take a look at the other aspects of your business. You mentioned earlier a point I would like to pick up on about this idea about helping Europe with its energy security. We talk a little bit about LN Energy, which of course is based in Italy. I know you've got assets here in the UK as well. Give us some more depth analysis about what you're trying to do about this energy security issue.
I can give a little bit of background on this as well. So essentially what Reabold is trying to do is identify projects with a low technical risk, that for whatever reason has been stranded. And through the innovative approach of applying either development plans or unique funding solutions, we believe that we are able to then bring the production forward or unlock the production, I should say, from these stranded assets. So I'll give an example of a transaction that we executed or completed on and received the final tranche of money from earlier this year, which was the sale of the northwest of Shetland asset Victory to Shell, and the gross proceeds from that was for 32 million. Now, Reabold Resources secured and funded a lot of the work program associated with Victory, which was a field that I think had been first discovered back in the 1970s, but for a series of reasons was never secured and put into production. With the innovative approach that Reabold uses, we're able to take the funding, progress the asset, and ultimately sell it such that it, again, will be providing gas to the UK. So that's a successful case of what we do. And the other projects that we're looking at to do something very similar are in the UK, the West Newton asset, which is our most substantial scale asset in terms of gas resource, closely followed by the Colasanto field, which many would argue is the largest undeveloped gas reserve in Western Europe. So it's really just following on from what our objective is. And that's the business plan, but it probably is worthwhile saying that that's against the broader backdrop where we are clearly in a situation where security of supply from a policy perspective has been ignored, and it is hurting Western Europe. It's hurting security of supply, it's hurting consumers, and it's hurting competitiveness. So we are playing our part in improving all of those aspects of the Western European market. And in the process, we believe creating the potential for substantial value for Reabold shareholders.
It certainly seems like Reabold is in a good place, but if you look at the share price chart, I think we've got a share price chart here showing what's happened. I think we've got, what, £7 million market cap at the moment, share price below cash. Why is this? I mean, you talk about the big asset that you've got at the moment, which could be one of the largest in Europe, and that doesn't seem to be represented. What do you say to shareholders as co-chief executive of the business, which appears to be unacknowledged in terms of share price?
Yeah, and as I had alluded to, one of the biggest challenges the industry has is many companies in our space that do similar things to what Reabold does will describe the high quality nature of the assets that they have. And the biggest issue associated with extracting value from them is the funding. And the market has lost, the public equity markets, has lost so much confidence in the ability to secure funding. It has now seemingly applied negative enterprise values to those assets. And that just goes to show what I suppose, a dire state the capital markets is in, given the situation I described. So it is incredibly frustrating that when we do two things, one, make substantial steps forward to showing that Reabold can, in a very difficult market, secure forms of funding to take its project forward, and then two, has a set of projects from a capital efficiency point of view, which are amongst the best in the industry, we still do not get the value recognition for it because of the broader context that we're operating in. And this is true not only for Colo but also for West Newton. And one of the key drivers, key aspects of what we're working on in West Newton, as we've announced previously, is an early development plan that gets gas into production, hopefully as early as 2026, again, with a low capex requirement in order to get to early production. So all of the aspects of what we're trying to deliver recognizes the conditions we're facing, and we can only hope that delivery of the strategy, the ultimate balance of reinvestment and returns to shareholders will show through in the share price in time. And shareholders who I believe stick with that story will reap the rewards of it.
Let me say, you're in good company in terms of the problems that are being faced, because I mean, it has to be said that AIM particularly has been particularly badly hit. What do you think is the solution to this? Would you like to see something done politically in terms of leadership? Do you think there's something that's missing in terms of the way in which these markets are represented at a political level? Or is it something that's more fundamental and broader than just here in the UK? Do you think it's more global, of an underappreciation of what these of companies like yourselves are trying to do?
Yeah, that's a really interesting question, and there are many facets to it. So I will try and take them in piece by piece because I think this is a highly relevant point, set of points that you raise. So first, if we just look at the AIM companies, many of them who tend to be focused in the UK have suffered significantly from the uncertainty associated with political policy for upstream oil and gas, and whether that's what Labour propose as their policies from a fiscal point of view, or indeed what the current government is doing, have not been helping the oil and gas industry, despite the fact that the rhetoric and tone from the current government suggests that they're very pro oil and gas. The evidence for this is clearly in two forms. One, the timelines associated with actually being able to deliver activity on the ground is so protracted because the regulatory environment is extremely strained for oil and gas activity. And then secondly, as I said, similarly associated with what we've just described, is that the offshore, in particular, the offshore projects for AIM companies requires a lot of capital. And that capital will not be spent when there is so much uncertainty associated with the fiscal regime. And that clearly hits the confidence of investors. Now, although Reabold is not in that situation, because the capital requirements to take our projects forward are so much lower than the rest of the industry, we still fall into that bucket of concern by investors. Now, the second element that you raised was, okay, well, what about the rest of the industry? Kind of outside the UK AIM market and outside the UK companies with assets outside the UK. Now, this is a very different situation. If you look at many Australian listed companies, Canadian listed companies, or indeed US companies that are independents, so not talking about super majors, but just independent companies, many of them trade at substantial premiums to where the UK companies trade. I've heard it argued, quite rightly so, that if companies like us that trade below cash, where cash is such a critical resource, is in a situation where there are other companies trading at premium to cash, and indeed recognizing some, if not a substantial portion of their resource potential, means that they could be targets ultimately for some kind of consolidation or other forms of predatory behavior from companies not listed in the UK market. Now, I think that would be a shame because the AIM market is such a vibrant source of both ideas and assets that losing out to other markets would be a shame in the long term. But it is clearly an issue that we have to think about, manage, and consider. And this is probably something all AIM companies should be considering, because so many could be vulnerable to the situation that you just described. So there are many facets to it. It does make for an interesting time for sure, but I think also highlights fundamentally what you're, I guess, getting to the heart at, that when there is such a fundamental dislocation between inherent value of the assets and what's represented in the market, something will result in that being resolved.
Yeah, it's frustrating, I know, for you as a leader of such a company. But as I say, you're in good company. It's a question of whether or not this is going to get resolved. Look, we've got to leave it there. But thank you so much indeed for joining us. It's been fascinating chatting to you about Reabold and the environment in which your shares are trading. Good luck, and we'll maybe catch up later on in the year. Thanks, Sachin.
All right. Well, thank you very much for having me. Appreciate that.
That's Sachin Oza. He is the co-chief executive of Reabold Resources.